What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and what an interesting way to start the week. I am aware there's a lot of geopolitical events going on right now, so I think that's having quite a big impact on the charts, to the point where I genuinely forgot about how much is going on right now. So I've been seeing it all over the news. I'm sure you guys have too, and that would probably explain the kind of volatility we got with regards to us gapping so largely on dollar. We did trade up to our weekly draw liquidity, but we didn't quite take it, which if anything just builds up more stops up there, maybe for later on in the year, or for a later point. And then you can see price drops very, very aggressively to the downside and fill in our discount PDA after daily fair value gap. So although we anticipated us to trade down into this bearish fair value gap, you'll remember in yesterday's video I was expecting that we'd trade down into that first before trading up, but you can see we traded up first and then we've traded down into it. So what does that mean? Well, now that both of our PDA arrays have essentially been traded to within one day, I can imagine we will go into a slight consolidation, although I say that we've got quite a lot of high impact news. But looking at how heavily bearish we are, it's more than likely we are going to see some kind of rollover into the next day where price continues to drop. But yeah, very interesting day, very aggressive, and I wish everyone well. But let's continue. So we are going to drop down to the 4 hour, and you can see again that daily fair value gap's been traded through, and it looks like we're going to be rolling over lower. And you can see that we do have a 4 hour fair value gap right here that we will likely try and fill next. So as far as I'm concerned, now that this fair value gap has been traded to, I'm going to grey it out. And the 50% level of that should become relevant to us, because as far as I'm concerned, price shouldn't need to trade back above there, assuming we are going to roll over. So again, highest tomorrow, ideally we can rally into that. If we do get any kind of rallying, this would be where I'd expect it to rally to. However, again, seeing how bearish we are, it's very well that we might just find ourselves trading straight down and filling this next fair value gap that we have over here. So I'm looking for this to get filled moving into tomorrow, and depending on how bearish we are, and how aggressive price wants to move, we could go even further than that, and then potentially start looking down into this heavy discount below here. But it all depends on how much price action we get, and all these geopolitical events are only going to push that. But nonetheless, this is my main target tomorrow, to try and fill this. And then I'd want to see price, it's going to find resistance once it gets to about here. Once it gets into this range that we have here, it'll probably find some resistance as it's working its way through there. But nonetheless, there's very much potential for us to get down to this discount as well, but we'll talk more on that tomorrow. So let's go to the 1 hour, and you can see again, crazy displacement, absolutely insane displacement. Ran out stops. Here's a bullish order block that is completely disregarded, as in it traded through very comfortably, although there's a little bit of resistance, not the most. And again, we're likely just going to roll over, fill this fair value gap, and then it'll be interesting to see how it acts once it gets into this range. So I'm not saying it's going to necessarily get down into these lows. I'll be very concerned if it did, to be honest. But once it gets down into this range where we have a breaker, low, high, lower, low, and this bullish order block, once it gets to the low of that, I'm very interested to see if we do get some kind of bounce. And if we do, then it's potential that we can look for some kind of longs, maybe for the middle week on dollar, for some kind of retracement, maybe to the 25% level after range that's formed. And what I mean by that is that obviously it's created this crazy high, and let's say it was going to bounce off the bottom of this, then I'd be expecting that price may want to return back inside of its range, potentially to here, or some kind of consolidation. So yeah, it's very difficult, especially when you have this much movement on a Monday. It's just driving me insane. But again, there's only so much we can do, and it'll be interesting to see tomorrow. But nonetheless, I am quite confident that this consolidation that we have over here is going to hold price, as in I doubt we're going to get down into this red level. We can, but I doubt it, especially seeing how much back and forth price action there is. The fact that we did significantly and leave this range, us coming back to here, if anything, it should be a point of reaccumulation. It's just that the way it's got down here and how quickly it's done it is very misleading to me. So that's going to be everything on dollar, so do stay safe out there, guys. Let's go on to GBP USD, and make sure you have watched yesterday's video if you haven't yet, and you'll see GBP pretty much on the same thing. So obviously we were anticipating the pound to eventually run out this sell side liquidity. However, we did get the rallying. We didn't get much of a rally at all. It came down, ran the stops, and then aggressively traded to the upside. So we're looking now to see if price does want to start reaching to some kind of premium PD arrays and roll on high and start running into these premiums, such as up here. Now again, whether it gets here this week or next week, I'm not sure, I don't know, but this would be its next call for me. Well, first it would be up here, to be honest, whether it can even get up there. But let's go to the daily first before we talk too much. And I do like the way this looks. When I see a wick like this, when it comes down, grabs a nice sell stop in a fair value gap, remember this is a weekly fair value gap, grabs it, leaves it comfortably, and there's a bullish order block that is created on the back of it, so that, you know, this is now a bullish order block. As far as I'm concerned, if price is going to tap down into this range again, that should give us buying opportunities with the expectation that we may want to potentially run up into this rejection block level. So that's what I have my eyes set on right now, assuming that dollar does want to continue to the south side. And then we also have a beautiful breaker. So we've got a low, we've got a high, we've got a lower low, and then we have this expansion. So I'm looking at the last up close candle, which is this, more specifically the wick, and I'm basically allowing price to tap down into this where I want to see accumulation. It's also covered with a fair value gap, so that's very possible tomorrow. And then on the back of that, maybe moving into Thursday, Wednesday, or Friday, we might want to, well, it would be nice to see if price can continue to trade on higher and maybe trade up into the rejection block levels, which are in this premium zone. So let's go to the 1 hour. And you can see relative equal highs up here, very nice, beautiful fair value gap in this premium as well. So there is a draw up here, nonetheless. So there's reason as to why price may want to continue to rally up into that, which is what I'll generally be targeting. And to be honest, in line with that, as I said, I'm not expecting dollar to continue to trade to the downside, with this at being a very big stretch, but nonetheless still a potential. So these are the things I have my eyes on. Set on if price does drop and it drops any lower than this level right here, which is 1.35. If we find that price drops below that, I don't want to be involved. And the reason for that is because it will just come straight back into. You see how we've traded up, up, down, up and then down and then up again. This whole range has been traded on both sides, as in it's been distributed up and then down and then up, and it's left it. So as far as I'm concerned, if it comes back down into this range, it's just going to be messy and it'll be very high resistance, and I don't want to be trading that. Whereas if it taps into here and leaves it pretty quickly, I'll be confident then to be in a position to hold it to see if it can run into our buy side liquidity target, into our fair value gap that we delineated up here in the premium. So that's just something to consider. But moving tomorrow again, lowest I'd want to see will be down here, if it even wants to. It's very possible when I see price action like this that price may just open in London and then continue rallying, and then we don't see any kind of pullback to like New York. So that's also a possibility, because it doesn't need to run stops. We're obviously on the move already. It's already technically tapped into it here after it's traded through it, you see. So, you know, there's not a need or necessity for price necessarily come and accumulate again. It could very comfortably just roll on over in London, and we might find some very large expansion on the back of it. Same thing with dollar. We don't necessarily need to see it retrace back into this range at the 50% level. It might just roll straight over, especially looking at how aggressive this is. It might just roll straight over and continue trading lower, which is completely fine. And it's runners like these that you want to be holding on, but need to know when to start pacing out of your positions, if that makes sense. So that's going to be everything on pound. I hope that all makes sense. Let's finish up on euro USD. And similarly, prices ran stops very deep and aggressive, but more in line with dollar. Let's go to the daily real quick. And we've traded much higher than I anticipated, and I'd be looking for, you know, buy side liquidity. We've got relative equal highs right here. I'll be looking for that as a target moving into the latter part of this week, as in Tuesday and Wednesday, as a continuation. And then similarly, we don't have a breaker, we have a mitigation, because we've got a low, high, higher low. So there's a little bit more bullishness on euro, which we need to take into consideration. And price doesn't need to come all the way down here to re-mitigate with that. It would, if anything, it will mitigate somewhere around here, as in, you know, a point whereby there's been a fair value gap, it's delivered on the downside, and now we've closed above it on the upside. But as we drop down to the low time frames, like the 1 hour, you'll see this bullish order block down there. And these are just potential areas where as soon as price drops below that opening price tomorrow, I'd be wanting to look for buys. Realistically, again, I'll be looking at the 15-minute at the time. So when it gets to midnight, I'll be looking at the 15-minute, and I'll be looking for some kind of discount PD array. And then I'll be expecting that PD array to be traded to by London around 3 a.m. to 5 a.m. at London session, that is. And then once it's done that, then is when I'll be permitted to enter the position. If it ignores that 15-minute discount PD array, I'll probably just wait. Or if it trades through it to the downside and continues to drop lower, I don't want to be involved. It's as simple as that. So that's really how I'm approaching things. Waiting for midnight, identifying some kind of discount PD array, using London for it to drop into it, and then I'd want to be trading that higher. But you can see we're still moving quite aggressively, as in price could easily tap into that buy side now. But that doesn't mean that it's not going to keep running. And like I said, there have been times where price will keep running for the whole week. As I said as well in yesterday's video, I was explaining how I was expecting the high to be created in the early hours of this week, as in Monday or Tuesday, but it looks to me like it's possible that the low has been created in the early hours this week, and off the back of that we should consider, you know, expecting more of an up close candle. But I don't want to talk too much yet. It's likely one of these days is going to be heavily consolidated. When we have this much movement on a Monday, it might continue into the Tuesday, but we might find that Wednesday and Thursday, or just Wednesday, it's just horrible to trade. So that's just something to take into account. And again, with all the geopolitical events going on, there's only so much prediction and so much we can do without literally putting everything at risk. So very low risk in these conditions, guys. And tomorrow I will make sure to split up the days, so we can take a look at it more clearly. But I think because mainly I'm waiting for midnight. When we've had this much movement, there's no point in me looking at yesterday's midnight candle. Whereas now that we're moving into Tuesday, I'll be looking at that midnight candle on Tuesday, dragging that through, and we'll be really taking a closer look at where price look like it wants to draw to. So that's going to be everything. I hope that all makes sense. Don't forget to drop a like, drop a comment, smash subscribe. Join me over on Discord. All the links are in the description. I hope you found this insightful, and I'll catch you guys tomorrow. Peace.